We would greatly appreciate you staying off of cell phones. Please pay attention. This is actually very good information. When I had originally asked my class at the beginning of the semester what things you would like to know that you believe would make you successful in life, quite a few students had mentioned insurance, how to invest your money, job benefits, and retirement. So that's what we will be covering. So to get started, I'm going to go ahead and introduce our speaker. This is Mitch Lunn. So I will let him introduce himself. And if you'd like to change a slide for me, that would be awesome.
Good morning, everyone. I'm sure that you guys were all very excited to get up this morning at 8 o'clock to listen to a talk about insurance and investments. We are going to try to keep this as entertaining as possible, so if I see you guys nodding off, I'll try to wake you up. There's some pretty good stuff that's going on. The next slide has all my education stuff on it. You guys can read that when it pops up. The things that aren't on here, I'm a dad, a father. I have a daughter that's about 4 years younger than you guys. So when I'm teaching this, I really want to kind of give you guys some different ideas of things that I want my kids to know. If I sound daddy, it's because I am. I'm a millennial, not a boomer, so no jokes out there. Kind of the weird stuff, put on there, member of the St. Joseph the Worker Club. The only reason I put that on there is if you guys have a chance to volunteer for things, get out there and do that. Those are the things that make the most impact on other people's lives, so try to do that type of stuff. And then at the bottom, reserve deputy for the Sheriff's Department, so I hope I don't see any of you guys on Saturday nights. That would be probably not so good. So,
Mitch, since we're recording this, could you stay?
Yeah, you bet, I'll try.
Yeah, that way they can
It's bright.
It's your stars.
All right.
And as you see, where did he originally graduate from for a college? He came here to Iowa Central, so.
To my guys in the back row, that's where I used to sit. So.
Perfect. Okay, if you'd like to change a slide for me. All right, so let's go ahead and get started with some insurance questions. First thing I want to ask you is, why do we even need insurance?
All right, well, the why, I think let's start with the story, guys, and we'll kind of base everything based on that story. You're out driving, and I know we always tell you guys not to text and drive, but I have yet to go to a stop sign and I don't see someone on their phone. So you're out tooling around and heading down the road, and you get that buzz in your pocket, and it's Jill. You've been trying to get her to text you back for a while, and you're like, I gotta check this one. I know I shouldn't, but I got to. You reach that phone, you pick it up, you look down, and boom, you just rear-ended the back of a new Tesla Model S. So, the questions that I have for you and why insurance is important is, do you want the first Tesla that you guys buy to be for someone else? Raise your hand if you want that to be the first one. No takers? All right. There's a whole lot of stuff that goes along with that accident, and we'll kind of go through some of that stuff along with the story. So that's kind of the beginning part of the why, and we'll kind of dig more into it as we go along.
So when should everyone start thinking about insurance?
As soon as you're driving a vehicle, I think it's a really good time to start thinking about insurance. It's the first thing that you're really going to have an understanding of how it works, and then all the different steps if you have to use it. If you get in an accident, what do you do? How do the coverages work? If something happens to me, what do all the little terminology and policy things mean, so that you understand how your car is going to get fixed and how you take care of the other person? There's all these little caveats to that, so we'll get into some of the details on that here after a bit.
Sure, so how do they get started?
So you guys have a generation that has more resources available to you in your pocket than when I grew up. There, at the beginning, there was no internet, so you guys can look online, find a local agent, talk to friends, family. I mean, the resources that you guys have to find someone are unbelievable. The one thing that I would say is, when you're looking for any help with insurance, investments, what you're looking for is someone that's going to help you, that has the heart of a teacher. The people that are up here teaching you guys, they really have your best interest in mind. As soon as you feel like someone's trying to sell you something or push something on you, that's kind of a red flag. You might want to just get up and walk out on that one. That goes with about anything that you do in life. If someone's willing to sit down with you and teach you the ins and outs of something and really has your best interest in mind, that's the person that you want to do business with and work with. The one caveat to if you guys do stuff online, you really do need to do your research and understand what you're doing. Especially with insurance, they're binding contracts, and when you select your own coverages and things like that, you're held to those. So if you make a mistake on those choices, and you have an accident, you are going to have the policy limitations that were set by you, and you're going to be living with whatever those were. So make sure you know what you're doing if you do that.
So there's obviously more types of insurance than just car insurance. So on the next slide, you will be able to see some of the different types of insurance that are offered, and these are ones that Mitch is going to be covering today. So what types of insurance are there?
Well, the ones that we're going to kind of go over today are the simple ones: the car insurance, home insurance, renter's insurance, life and health insurance. They're the basic ones that you guys are going to, as you progress through different chapters of your life, that you're going to have some working knowledge of. So we're going to try to go over those today and kind of give you at least a baseline, so that when you go sit down with your first person or you jump online to look for something, that you kind of have an idea of what's going on.
Perfect. So let's go to the next slide, because I think one really important thing that gets kind of confusing is the terminology that is frequently used in insurance. So if we can maybe cover a few of those things, let's maybe start with an insurance premium.
Sure. Insurance premium is just what it sounds like. It's the dollars that you spend to pay for the insurance contract. So when you buy insurance, you pay a premium. That premium can be broken into monthly, 6 months, annual. You kind of pick the way that you pay it, but the premium definition is the amount that you pay for the contract.
How about a policy?
A policy is the actual legal document. So that's the part where it shows all the ins and outs of what the insurance policy covers and what doesn't cover. If you guys are ever having a hard time sleeping, grab one, read it from front to back. I promise you that you will be asleep in no time. They are important because they do keep all the legal definitions and what's covered and what isn't, and we'll try to go over a lot of the common things so that you guys have a good understanding without having to dive into one of them.
So can you explain deductible then? Because that one I've heard quite a few times, and I know it's a dollar value, so is it something you want that's high, something that's low? You know, how does that apply?
Yep. So let's go back to our accident where we rear-ended that Model S, and your car's damaged, there's a deductible that needs to be paid. A deductible is the portion of the accident that you pay for. So you can select how much that is when you're setting your insurance up. It can be anywhere from $0 to $2,000 is common. I would say $500 is the most common deductible that's chosen. In an accident, you would pay that $500 to the body shop when your vehicle is repaired, and then the company would pay for the rest of the damage to the vehicle. So if you selected $500 when your vehicle's fixed, you would write a check for $500 to the body shop. Why it's important that you select the right one is if you don't have $500 and you have a $500 deductible, you're going to be scrambling to try to come up with that, and they're not going to let you have your car back until you pay them that deductible. So you want to plan accordingly with that type of stuff so that you know that you have a reserve that's large enough to cover it. If you don't, use a lower deductible.
Okay, so let's start with car insurance. There's multiple types of coverage that we can have in car insurance, so can you explain the different types of coverage then?
Sure. So the thing that everybody thinks about is liability and full coverage, and that's a really general way to look at it. We'll kind of break some little parts of it down, so if you're ever looking at a policy, understand what you're looking at. The liability coverage is the coverage that you are carrying for someone else. This is the legal requirement for you to be driving down the road. You have to have insurance that has liability on it. So if you're driving around a car that doesn't have liability insurance on it, so you're driving around uninsured, and you get pulled over by a officer and you don't have that insurance, they'll ticket you for not having it, but B, they have the discretion to impound your vehicle. So you want to make sure that at a minimum you have liability coverage on your vehicle, or you're going to be going through a whole lot of pain. The liability is broken into different sections, and this is when I talked about the online stuff. If you're looking at it, you really want to know what you're doing, because they break it down by bodily injury and property damage. So the bodily injury is like if I got in an accident with Professor Johnson and I hurt her, she goes to the hospital and has $100,000 in medical bills. If I selected a limit of bodily injury on my policy of $20,000, your insurance company is only going to pay out that specific amount. After that, they're done, and that remaining amount is going to be left to be paid. Well, you guys are all probably young enough that you're still on your parents' insurance. Your parents are probably going to get sued for the difference of that amount, and that would not be a fun experience for you guys to have to go through, and it sure wouldn't be a fun experience for your parents to have to go through. So when you're looking at insurance, you want to make sure that you have adequate amounts of coverage to take care of the other person. The property damage side of it is the last piece of the liability, and that covers the vehicle that you hit. So if you're out there and you smack into a G-Wagon and you have $15,000 of liability property damage coverage, you're probably going to exceed that amount, and you're going to end up owing that person the additional amount to fix their vehicle. And if you don't have enough, you're, like I said, you guys are probably going to have your parents on the hook for that stuff. So knowing what you have and even discussing it with your parents, because I'm telling you, I sit down with people every day, 5 times a day, and most adults don't fully understand the insurance coverages that they have. We talk about it all the time. Full coverage, I should probably go over. Full coverage is the what covers your vehicle if you're in an accident. So when you hit that other car and your vehicle's damaged, or if someone hits you and they don't have insurance, that's the coverage that's going to repair your vehicle. And that's broken into 2 parts. The first part is collision coverage. So it's just like it sounds. If you get in an accident, that's the coverage that comes into play for that accident. And then there's comprehensive coverage, which would be hail, theft, wind, fire, vandalism, that type of stuff. You can set deductibles for each of those 2 types of coverages, so you can have a lower comp deductible than a collision or higher. Well, you can kind of tailor that to however you want. That's a little bit in the weeds. Those 2 things are what you guys call full coverage when you guys are just talking to each other. So if you have full coverage, your vehicle's taken care of. If you have liability only, you're only taking care of the other person.
When would you say that it's okay to just have liability insurance, like when we're talking about the dollar value of their vehicles?
Yep. So driving around the parking lot, there's actually a lot of nice cars out here, but there are a lot of vehicles that probably are in that, $1,500 to $2,000 range. Well, if you're going to pay $150 a month for full coverage insurance on a $2,000 car, how many months are you paying that insurance before you've actually paid more than your car is worth? If you have a $500 deductible and your car is worth $1,500, you go in to get it fixed or they total it out, they're going to take the $500 off and they're only going to pay you guys $1,000. So there's a point at which your vehicle probably isn't worth enough money to pay the extra insurance to have it covered under full coverage. Now, if you have a loan on it through a bank, they're going to require you to carry that type of coverage, so you're not going to have a choice. So if you're borrowing money against something, the bank is going to want that covered.
Perfect, thank you. So how about, what would be a general price range for how much it costs for car insurance, and what factors contribute to the increase or decrease of the price?
Okay. This is the $100 question, right? Everybody wants to know. Your insurance can go anywhere from liability from $15 a month for liability up to $200. It very much depends on a lot of factors that are related to your vehicle, yourself, and your credit. And kind of break that down. If you're driving around a $50,000 truck, it's going to be more expensive to insure than a 2000 F-150, right? There's differences on those things. If you have a terrible driving record, you have a lot of speeding tickets or accidents, those are direct correlations to your driving ability, your rates are going to go up. The ones that people forget about are the ones that you just don't think about. Your credit score really does affect a lot of things in your life, so you guys really need to protect that. If you have a good credit score, you'll have a lot lower rate than someone that has a bad credit score, and the reason is they've done a ton of research that shows that people that have poor credit turn in more claims, and all the companies rate towards that. So this is that dad in me that's talking to you guys. If you guys protect your credit and do things to build it up, it's going to save you so much money, and it will put you in a position to win on so many other things throughout your life. So kind of keep that in mind. And then there's a lot of discounts that are tied to insurance. So if you're a student and you have good grades, If you take driver safety courses, if you put those little devices in your car that track how you drive, those all can give you discounts and affect your insurance significantly. I would say on average for you guys at your age for a liability policy, you're looking anywhere between $50 and $70, just to give you a better general idea.
Perfect, thank you. So let's talk about the process of filing a claim. Like, when should you file a claim, and how does, like, what happens?
Okay. Anytime that anyone's injured in an accident, you need to turn a claim in. That other person was hurt, that you got to get something going because there's going to be a need for that filing of the claim. If you have a fender bender and you have two cars that are messed up, I really recommend that you guys call an officer to come out and give you guys a driver information exchange. What I see quite often is if you don't do that, we live in a world where people aren't honest all the time. Shocker. They might not give you the correct information, and if you drive away and you don't have that, you're going to be out of luck trying to go back after that person if it wasn't your fault. A police officer is going to scan both your driver's licenses, print you guys out a report that has all that information on it. You can take that to your insurance agent. You can upload it to your phone. There's all kinds of different ways to turn claims in now. You guys, like I said, have more access to things than anybody. You could call in, you can use your app, you can log on to the computer and turn claims in, and you can go to your agent. If you've never turned a claim in, I highly recommend that you talk to your insurance agent, just because they're going to help walk you through that process and teach you those things. And that's why we sit in our offices for 8 hours a day, just to be there for all of you guys to help you out.
So pretty much, you should file a claim if someone else is injured, as well as if something happens to your vehicle or your property that you have insurance on that would damage it and therefore need repair that's going to cost a pretty substantial financial amount, correct?
Yep.
Okay. What if they just haven't cleaned their car for a really long time and it's pretty dirty inside and it's going to cost somebody to clean it out? Should they file a claim?
No, that goes back to that policy language. They don't cover mechanical breakdowns. They don't cover, your auto insurance doesn't cover any of that type of stuff. So if it's wear and tear on your vehicle, it's, you have a transmission go out, that is not an insurance claim. It has to be attributed to an accident or some type of loss like fire, theft, wind, hail, vandalism, that type of stuff.
Perfect. Let's throw out a couple what ifs.
Sure.
What if I'm insured
Okay.
and I let a friend drive my car?
Okay.
They crash my car. What happens?
So generally, the insurance follows the vehicle. So if someone is driving your car, your insurance is going to take care of that accident. So if you step into someone else's vehicle, you need to know some of the details about that vehicle. Is it insured? Because as the driver, you're responsible for what you're under control of. But from an insurance standpoint, the insurance follows the vehicle, not the person. So if Nikki borrows my truck, takes it out and gets in an accident, my insurance is going to be on the hook for all the damages to the other party and to my vehicle.
What if they didn't have a valid driver's license?
That would be a big problem. Know who you're letting drive your vehicle. If they've had OWIs or they don't have a driver's license and you let them behind the wheel, you're breaking a part of your insurance contract that's saying that know that there's valid drivers behind the wheel of your car.
So let's say I want to go on spring break and I go to South Padre, right? And I rent a vehicle with some friends and I'm driving the vehicle and I get in an accident with a rented vehicle.
Yep.
Now what?
Most policies, and check with all the carriers, but almost all of them cover the rental car the same as your best covered vehicle. So if you have a fully insured vehicle, your rental car would have that full coverage insurance on it also. As long as, there's lots of caveats. It's in like Canada and in the United States and Mexico. If you rent a car overseas, there would not be coverage for it.
Okay, let's go ahead and look at the next slide.
There's that Tesla accident that I talked about. That was a rear end accident with 3 people in the car. They were all injured. And that's kind of some of the basis of what I wanted to kind of use that story to share some different examples of how things happen.
Perfect, okay. So we're going to move on to some home insurance. Hopefully in the next few years, this is something that many of you are going to start considering a little bit is, you know, if you're going to be planning on maybe purchasing a home, obviously you'll want to protect that. So let's start with why is home insurance important and what does it cover?
So home insurance is important because it's probably going to be the largest investment that you guys make in one single time in your lives, right? When you purchase a house, it's a huge expense, and home insurance is going to protect that in case of a major catastrophe, fire, tornado, huge hailstorm that wipes out the roof. That's what you need in place. You're going to be required to have it if you get a loan. All the banks require you to have it. And on that last thing, it says escrow. Normally, the way that it's paid for is that the home insurance is part of your loan that you'll make every month. So they actually escrow that property insurance and taxes. There's other coverages in there that covers all your stuff. So if you have a fire, it replaces all the things in your house. So it's not just the structure. It would replace your TVs, couches, clothes, all that stuff. And even with renter's insurance for you guys, it's a really good idea to take pictures of your stuff, because if you guys ever have a fire or something like that, you're not going to know what you guys had. Having photos really jogs your memory to get that stuff taken care of and replaced.
What if we had a party at our house and someone got injured?
Yes. There is liability coverage on it. So if you guys do something that would contribute to the injury of another person, the insurance coverage would come in and take over on that. So you guys it would defend you in a lawsuit, and it's just a really good idea to have that in place generally.
So to further explain escrow, ultimately what we're saying is that when you take out a mortgage or the loan on your home, included in the monthly payment that you don't have to worry about because it's already included in on it is the insurance. So you don't have to make sure that you make that monthly insurance payment on top of your home payment. The bank takes care of that and lumps it all together, so that really one payment is coming out of your account every month. Yep. So it's not necessarily separate payments. The one payment for your home, it also includes that insurance.
Yep. When you look for home insurance, make sure that you sit down and talk to somebody. There's a lot of little ins and outs with that, and price does matter on that. So, because the price that you get is what passes along into that escrow. So the better deal you get, the lower your house payment will be.
Can you give them a rough idea of maybe a average starter home's insurance price?
Yep, it's right around $100 a month for insurance on a house.
Perfect, thank you. So let's go to the next slide. Thank you.
So this is two examples of big losses. This first one was here in Fort Dodge. That was the Becker Fire Apartment. And this is one of the stories that I want to share with you guys for renter's insurance, because I think a lot of times you guys don't fully understand all the little pieces of renter's insurance. And the picture to the right side was from the Parkersburg tornado that happened in Iowa. And I put it in there because a lot of people have never seen the full scale of how devastating some of these things can be. I mean, that's a picture of Parkersburg, and I mean, it's hard to even pick out what you're looking at. That's the reason home insurance is there. If that was your house, you're going to need something to come on, clean all that up, and put a new house back down. So just two examples of why.
Perfect. So on the next slide, we are going to start talking about renter's insurance. So I'm just curious, by a show of hands, how many of you have some personal belongings here on campus or in an apartment that you may have that are worth some money that would cost you quite a bit to replace? Laptops, even jewelry, any clothing. Anybody have something of value? Okay, anybody planning on transferring to university and renting an apartment or a house? By a show of hands? Okay.
Stick them up higher, we can't see them.
Yeah. Perfect.
There we
That's a
go.
lot better. Thank you.
So,
Consider this, sorry.
Okay, thanks. Renter's insurance, Iowa Central, if you guys are living in the dorms here, I think has some basic coverage for you if like they have a water leak and stuff gets damaged, but theft of items isn't covered. So if someone comes into your place and steals a bunch of your stuff, you can set renter's insurance up to take care of a lot of that type of stuff. When you're out on your own and you go out and you're renting a place, that fire picture that I showed you, it replaces all your stuff that was in there, and you got to realize that there was a lot of units in there and they weren't all damaged by fire. A lot of them had smoke damage. But the one thing that really happened that caught a lot of people that didn't have renter's insurance off guard was they didn't have a place to live because they had to shut the building down and they had to get it all cleaned up and rebuilt. So the people that were not directly affected by the fire, just had smoke damage, they didn't have a place to go. So they had to now find another place to rent. Usually there's a deposit required. There's all kinds of expenses to moving. Their stuff smelled because it had a lot of smoke damage. A $10 a month renter's insurance policy would have paid to clean all their stuff, replace anything that was burnt, and put them up in another place until that place is fixed. Not a lot of people have that kind of coin in their pocket to go and do all of those things. So they're very inexpensive policies. When you guys get out on your own, you're almost crazy not to have one for what they cost. Like I said, they're right at about $10 a month.
I think I spent more than that at Ponchero's yesterday.
I think I probably did too.
Okay, let's go ahead and go on to the next slide, which is something you may or may not have heard about thus far, life insurance, but it's something that you're going to run into in the upcoming years. You even may have some friends who go into the insurance industry who ask you about it or are looking to help you purchase a life insurance policy. So I think it's important to start learning about that now and what that all really entails. So let's first start and talk about what's the importance of life insurance.
This right here is probably one of the saddest stories that I had seen in a long time, and I stuck it up here. This young lady had passed away. She was in medical school, and she owed about $200,000 in student loan debt for school. When she died, your non-federal student loan debt, so if you have private student loan debt, is not forgivable upon your passing. If your parents have co-signed on that stuff for you, they're going to be on the hook for it. So this family still has to make payments on their daughter's education, even though she's not around. And as a parent, and I lost my sister at 26 years old in a car accident. I just can't imagine being a parent and having to make those payments every month. Life insurance, the need for it, if you really want to break it down to keep it super simple, if you have debt that you owe anyone, you probably should have life insurance. If you're responsible for the livelihood of anyone else, so I don't know if there's any young parents in here, you should have life insurance. You are responsible, even if you're not here, for taking care of that person financially. So that's the why you need it.
So how does it work?
There's two different kinds. There's term insurance, which if keep it really simple, it's like renting a house. You can rent life insurance for a specific amount of time, say 20 years, and you can do it for a very inexpensive cost. Like for you guys to get a $100,000 life insurance policy at 18 and super healthy, you're talking $15 a month, and you would have that policy all the way until you were, 38 or 48 years old, however you wanted to set it up. So it's not expensive to get it if you want to do the term side where you're just renting it. There's another type called whole life insurance, and whole life is permanent, so you buy it and you can own it for your whole life, so it'll be there the day that you pass away and pay out to your family. It's significantly more expensive in the upfront side, but it does have a cash value accumulation, so over about 20 years, you'll end up taking money from your left pocket and sticking it in your right pocket. It'll grow enough value that over that time, it should have what you put into it over that 20 years and then grow from there. So it can be kind of a savings vehicle down the road. It's not a good investment. So we're going to talk about savings versus investments. If someone's trying to sell it to you like it's an investment, it's not going to grow anywhere near what other investments are. So kind of be wary of someone that's really pushing whole life insurance on you as an investment vehicle, because it's a good savings vehicle.
Okay, and you already talked about price. So, and to give you a good idea, my husband and I looked into a term policy here a few years ago. We were about 30 years old at the time. And for each of us, so for a $500,000 policy, I think I pay $62 a month. So
Yep.
it's very, very reasonable and protects us and if anything were to ever happen.
I will say, at your guys' age, I never thought about it, but as soon as I was married and I had my first kid, I walked into and got my first policy. It's not a difficult thing. With you guys being as young and healthy as you are, you'll never get it cheaper than you can now, so use your health to your advantage.
Okay, let's go to the next slide. We're going to briefly talk about health insurance. Most of you probably don't have to worry about that right now due to being covered under parents or guardians. But do you know what the age is that they're covered until and then what happens after that?
Yep. Full disclosure on health insurance, I do not know that much about it, so kind of that stay in your lane thing. This isn't my place. It's normally you're covered until age 26 under your parents' policy.
And what's the importance of why do we need health insurance?
Health insurance is, medical bills, I should say, are the number one reason that people go bankrupt in the United States. If you go to the hospital and you don't have medical insurance and you get, a $500,000, $600,000 hospital stay and you're on the hook for that, A, you'll never pay it off. It's going to be too much money. And B, it's going to hang over your head in everything that you do for the rest of your life. So finding an employer that has health benefits when you go look for a job is really important. If you can't find an employer that has it, looking on the open market or talking to health insurance professionals to find you something that you guys can afford. They'll get you set up, but you definitely do not want to go without it because you have a good story that really kind of drives it home.
Yeah, so let's go ahead and go to the next slide. So this guy's name is Matt Johnson. I may or may not know him. He raced motocross ultimately almost his entire life. So he had, in this situation, just raced at the MGM Grand in Las Vegas. Anybody been to Vegas or heard of the MGM Grand? Pretty cool place. Okay, so he graduated from Iowa Central from the diesel program and the auto tech program. He had a great job as a diesel mechanic here in town, had been making good money for quite some time, living on his own. He was actually on his way to earning his pro card in motocross, was doing a really great job, and decided just to do a small local race over in Eagle Grove. And if we go to the next slide, on August 27th of 2011, he had a pretty significant crash. In which the dirt bike came up and came right down on his head and cracked open his brand new $600 helmet. He was life flighted down to Des Moines where he had 14 days in a coma, which was not medically induced. He had to wake up on his own. Once he did wake up, he did not know how to talk, walk, eat, swallow, the normal things that we would all take for granted every day. So he ended up spending 45 additional days in the hospital. He did have to relearn everything, and by the time that he walked out, his medical bills would have been about $990,000. He was, from the stories I've heard, he was a little bummed that he didn't stay one more day to make it to the $1 million mark. So if you look at those pictures there on the top right, that's him with his team of physical therapists. You can see at the bottom of his shirt, does anybody know what that is? That's a belt that he had to wear because he still couldn't fully walk on his own at that time. And then at the bottom, you can see that's when he was leaving the hospital on October 11th, 2011. So this year was his, has been 10 years since he had his accident and has fully regained almost everything. So hand-eye coordination still a little bit off, and he blames a few things on short-term memory loss, but he chooses what he says is going to be short-term memory loss, and it usually has something to do with something I told him. And I do know this man, he's my husband. So this is the importance of health insurance. Luckily, he was at the age of 24. On one side I put 23, but I had forgotten he had just had a birthday, so he was 24. And he was still covered under his parents' insurance. So there actually ended up being a pretty cool Blue Cross Blue Shield commercial that was aired across the United States on his story afterwards. So, okay, we can go to the next slide. All right, so benefits in the workplace. So this is something that's really, really important because pretty soon, in the next few years, many of you will be going out and looking for jobs of your own, and you'll be receiving job offers. So the number one thing that you would think of as a recent college graduate looking to earn some money is just money. What am I going to make in wages and salary? A lot of us don't really think about the added cost of what benefits would be that are offered in the workplace. So let's go ahead and talk about what are some different fringe benefits that you can get offered in a job.
Sure. So fringe benefits in your employment can be health insurance, vision, dental, 401k, pensions. There's all different things that employers can offer you. And all those things, I own my own business, so all those things come at an expense to your employer, right? They're paying for these benefits to offer to you, and there's a lot of value in these benefits that I think a lot of, especially younger people, don't fully understand. So we made a slide that kind of highlights some of the differences.
Sure, so if you want to go to the next, there we go.
So job A, you guys are just getting out of college, pays $23.50 an hour. You'd be making about $4,073 a month, so not a bad job starting out, right? Job B is going to pay $21 an hour, which is $3,640 a month. So by a raise of hands, who's taking job A? Raise them up so we can see.
Just based off of pay. I would think just based off of pay, we would all raise our hand with job A. But if we continue with job B,
Yep.
it has fringe benefits.
Yes. So the job B is going to have health, dental, vision, short-term disability, and a 401k, and a 6% match on those contributions for your 401k. Now, who's going to take job B? Wow, you guys are already ahead of the curve. So if you go to the next slide, job A, if you work 40 hours a week all year long, is going to pay you just under $50,000 a year. Job B pays you a less salary, but actually with all the benefits that are in place, you'll end up making closer to $52,000 a year. And all of those, the information on the pricing on stuff was actually pulled from Blue Cross Blue Shield, from a recent meeting that I actually had with them on our employee benefits. And then the disability insurance was quoted through State Farm for a 22-year-old. So this is very realistic to what you guys would see when you're looking for a job, the differences.
And especially on that health insurance, remember, if you are at the age of 26 or older, you are responsible for making sure that you do have health insurance. And it will be an out-of-pocket expense if it's not offered by your employer, or at least if they contribute to it. So just keep that in mind, that that's a pretty important one that's offered in the workplace as well. So I see we have a question back there. That would be gross income.
Gross income, yep. The easiest way to figure take-home pay that's halfway accurate is you can take whatever you're making annually and times that by 0.7, and you'll be very close to what you're taking home. So.
Okay, let's go ahead and go to the next slide.
Yes.
Oh, go ahead. So the question was, is there any certain limit on income or kind of threshold amount on your income where, let's say if you made $200,000 a year and they say, we're not going to give you your benefits anymore. Is that kind of right? Yeah. Okay.
It's really up to your employer on what benefits they're going to offer. I think what you're talking about is there's some subsidized healthcare plans. So you can get plans through government-sponsored healthcare if your employer doesn't offer it, and they do phase those out as your income goes up, so you would end up paying more out of your own pocket. But your employer, if they offer you health benefits, usually the salary wouldn't matter. I mean, they're going to offer it to everybody. If they make $30,000 or if they make $200,000, that's the employer is the one that's providing that benefit.
And that's told you up front during your onboarding process at whatever job that you take. They tell you, here's your benefit package, and it's usually a contract deal. So.
Yep.
Good question.
So ask a lot of questions when you're in those onboarding meetings, because when they're setting up the benefits, that's your time to ask as many questions as you have. Go ahead.
The question was, if you're receiving money from the government, does it affect your cost of health insurance?
I'm not sure. There's going to be, I think in a couple weeks, a tax person coming in. That would be a great question for them because they would know the answers to that one.
Okay, so we're going to talk about Jack and Jill, so go ahead.
Okay. So I'm going to have to stand up for this one. This is, whenever I do these things, this is the stuff that gets people the most excited, right? Talking about money and trying to get to retirement and how do you save and all these different, you guys just have a lot of questions, and you guys see so much stuff on YouTube and all these different things that you guys have access to that talk about money, and it's really interesting how much information that you guys have available. But this concept still seems like it gets lost on a lot of people, so I wanted to really highlight it. So I'm going to use the story of Jack and Jill. So Jack is a real fun-loving guy. I mean, he's got a decent job. He loves to go do stuff. He drives around the nice new truck, jacked up, it's got rims on it, has 3 motorcycles. He spends every dollar that he makes, but he's having a good time. As he gets older, has a family, he finally hits age 45, and he's like, man, I got to get after it. This whole retirement thing's creeping up on me, and I need to start putting some money away. So he's going to start throwing $500 a month into his retirement accounts. And after 17 years, because he wants to retire at age 62, he's going to have contributed $102,000 to his retirement. So I think we can agree that Jack did a pretty good job of setting money aside after age 45. Now Jill, she was not snoozing in this class. She was paying a lot of attention. And at age 20, she started putting $150 a month into her retirement account. So after 42 years, at age 62, she's going to have contributed $75,000 of her money into that retirement account. So the question, and let's poll it, by a raise of hands, who's going to have more money at age 62, Jack or Jill? If you think Jack, raise your hand. Okay, couple. If you think Jill, raise your hand. Okay. The next slide is going to show you the true power of compound interest. Einstein's been quoted as saying compound interest is the 8th wonder of the world, and this is the reason why. So after 17 years of contributing $500, Jack is going to finish, if he averaged, so this is using the same investments. They're not, nothing's different between the two of them. They're getting the same type of return. He has $170,296. Jill, even though she contributed less, has almost double what Jack saved his entire 17 years at $500 a month. So I really want this to sink in, guys, because this is the stuff, if you start young, you can't mess this up. If you wait a long time to start this, you're going to have to push in so much more money than you would if you just got going at an earlier age. So take advantage of your employer's plans. Make sure you're setting money aside for yourself. So who was shocked to see the difference in the numbers? I mean, we all thought, a lot of us thought Jill was going to make more, but did you guys think it was going to be this much more? Yay, nay?
All right, pretty substantial. So that will open our talk into retirement on the next slide. So obviously Mitch just really hit on the importance at starting at a young age, but what different types of retirement accounts are there? I know we hear a lot of terms, specifically like 401k is talked about, maybe an IRA. So what are some kind of main general or basic ones that they'll run into, and what's the difference?
Okay. So this is where it really gets in the weeds, and if you guys have questions or you want to look stuff up after I talk about this, Investopedia.com is probably one of the best websites to get general knowledge of all of this stuff. So, mark a note to put that in your phones, and it'll kind of answer a lot of questions that you have. The basic retirement accounts that are available to you guys once you start working, employer sponsored would be like a 401k, which would be someone like if you worked for me, I offer 401k at my office. That's an employer-sponsored retirement account. A lot of employers will give you a match on your money if you contribute to an employer-sponsored account. So with my office, I give a 4% match on any contributions. So if you contributed $50 a month to your retirement account and that was under 4% of your wages, I would match that $50. So to be very clear, if you're getting a match from your employer, you have to take advantage of it, because if you gave me 20 bucks right now and I give you 40 back, and that's the deal, no strings attached, who's turning that down? A lot of people don't understand how that works, and they don't even contribute into their retirement accounts to get their employer match. Way more people than you would think, and that's free money, so do not leave free money on the table. The other types of IRAs or individual retirement accounts, if your employer doesn't offer a retirement account, you can go in and talk to an investment professional. You can log on to TD Ameritrade. You can get on Robinhood. There's 100 ways to set these up. IRAs are an individual retirement account for you to set money aside for your retirement. And there's two different kinds of those. There's a Roth and there's a traditional. And the only difference between the two is the way that they're taxed. With a Roth IRA, you put the money into it and you pay the taxes right out of your check. The money goes in, it's already taxed when it goes in. So in the Jack and Jill example, if all of Jill's money was put in a Roth IRA, remember she contributed about $70,000, $150 every month. She would have paid the taxes on that $150 from her paycheck and put the money into the Roth. It would grow to the $372, and when she went to take it out, there would be no taxes on it. So she could take the full amount and she wouldn't pay any taxes on it. If it's in a traditional account, you get to deduct the taxes from your paycheck. So if you are making money, you're going to pay less taxes when you contribute to a traditional IRA, but that money has never been taxed. So as it grows over time, it's never been taxed. So it grows into that $300,000. Now when you take it out, it's subject to taxes. So when you withdraw the money from that account, you're going to pay income tax at whatever rate it is at that time for whatever amount you take out. So there's strategies around both situations, and at your guys' age, Roths are a really good deal. If you're starting to make $250,000, $300,000 a year, now you got to sit down and start to figure some stuff out. If you're making more than $100,000, sit down and talk to somebody to make sure that you're taking it the most advantaged way for you.
So I also want to make clear that it doesn't matter whether it's a 401k or an IRA or whatever, all of the money you invest in there is going to be growing at compound interest, correct?
Correct.
Raise your hand if you know what compound interest means. Okay, so let me explain it to you really quick. There's a difference between simple interest and compound interest. Simple interest means if you invest $100 and it gains 5%, at the end of the year, you're going to have $105. You're going to have gained $5, right? The next year, it is also going to be on $100, so you're going to gain $5. It remains at $5 every single period. It will never grow. Compound interest is simply interest on interest. So the first time, it would be $105. That 105 now is going to gain 5% interest on top of it. So now your interest is going to grow because it wasn't just simply on 100, it's now interest on 105. Whatever it just grew to, the next period is going to gain 5% on top of that. So does that kind of hopefully clear things up? Simple interest, you're getting the same basic interest rate gained every period. Whereas compound interest, your interest is going to grow on top of each other. What you have accrued so far is then going to gain on top of that. So it grows at a substantial rate over a period of time. Now, a savings account, so maybe you think, I'm just going to put money into a savings. A savings account is not going to grow at compound interest. What you have in there is just going to grow at simple interest. Whereas if you have an investment like 401k, an IRA, or whatever your retirement may be, that is going to grow at compound interest, which would end up in the results of the Jack and Jill exercise.
So you guys actually all already know what compound interest is because you just saw the example of it. So it's the power that makes that 72,000 able to turn into 300,000 over that 42-year period.
Okay, let's go ahead and go to the next slide. So on investing, let's talk about some different ways that they can invest even starting early.
Yep.
And then we'll go into a couple other things. So how could they start?
There's so many different ways for you guys to start. By a raise of hands, how many of you have like a Robinhood account? So you have a way to start already, and you are doing it probably. You can open up Robinhood, TD Ameritrade, you can talk to a professional and they can get you set up. There's all different ways to set up accounts, and when you set up these accounts, a lot of times you just don't know what you're setting up. That's where Investopedia, use your guys' resources, talk to a professional, figure out what you're doing. You can set up your Roth IRA, your traditional IRA, or you can set up they call it transfer on death. It's a taxable account, which is probably how you guys set up a lot of your Robinhood accounts. You're probably getting taxed on your gains or your loss, and you can write off your losses up to a little bit. Those are ways to start. The more important thing is starting to figure out what you're doing. One thing that I've noticed talking to people right now, and let's picture these steps right here. At the bottom step is learning about investments. The next step is starting an account. The third step is learning strategy. The fourth step is learning option strategies, and the fifth step is trading options or derivatives. A lot of people are jumping from that bottom step to the top step, and they're not taking the time to learn in between, and you guys are putting yourselves at a lot of risk by doing that. This is a process that you do need to understand, because if you're investing, not only can you gain money, but you can lose money, so you got to kind of try to learn about it.
So since you mentioned you can lose money, what should they stay away from?
There's the difference between investments and speculation or gambling is very, very real. When you're investing money, you're trying to do something for the long haul that has a long track record of success. So we know that over 20-year periods, if you invest in the U.S. stock market, there's never been a time that it's ever went down. So historically, you have a very, very good odds of increasing your wealth. There's different things out there now, like Bitcoin and all these different things. They swing wildly every day. So you could jump in one day and it could drop 15 or 20%. It could do the opposite too. It can go up 20%. So that's gambling, and don't kid yourself and think that it's investing. If you are doing that type of stuff, you'll get burned at some point.
Very good. So, and you already kind of talked about who will help invest your money. So I do also want to bring it back to what Mitch said very early on today, that you can find a financial advisor to help you with this, but make sure that you find one that's a good fit for you. Mm-hmm. And I have found good ones, and I've found ones that have not been a good fit for me. And typically, the bad fit would be anyone who was trying to sell me something and not necessarily help me understand and teach me things. Yep. So just make sure you find someone that you feel good learning from, and you don't feel a lot of pressure to kind of dive in and commit that day. So.
Here's the biggest red flag for you guys. If anyone's ever telling you that they know that something's going to happen with investments, don't work with that person. They don't. The President of the United States does not know what the stock market's going to do today or tomorrow. The Fed Secretary doesn't. So how can anybody on Main Street or in my office look you in the eye and tell you that I know that the market's going to go up or down, or Bitcoin's going to go up or down, or any of the stuff's going to go up or down? So people that are telling you that they have some magic crystal ball and they're going to get you really great returns and do all this stuff for you, if their strategy is sound and over time your financial advisors know the way that works. But a lot of these, I watch all these YouTube videos like you guys do because I think they're interesting, but they talk about all these different things and, oh, you're going to get rich if you do this. Generally speaking, if you think you're going to get rich fast, you are in serious gambling mode and you have a lot of potential for loss. It takes a long time and steady consistency to do that over long periods of time, and you'll get there, but it's not going to happen overnight. It might for some people, but there's going to be 3 times those people that are on the opposite side of that coin.
Perfect. All right, let's go to one more slide here and talk about financially successful people and kind of some of the traits.
So this is a slide that I show people quite often. Financially successful people generally have a plan. They work the plan. They set aside money regularly as a habit, so they pay themselves first and they do it consistently. They protect themselves from risk, so they're not gambling, and they make sure that they take care of their insurance and things like that, and they start their plan when they're young. If you guys do those 4 things, I'm telling you, there's really no way that you can mess it up and you guys will be financially successful. One saying that I heard when I was younger, and it stuck with me, and I don't know whose quote it is, but it's probably the best quote that I've heard. No one plans to fail. There's no one in here that's planning to fail. That you guys are at Iowa Central because you're trying to get an education to succeed. You're trying to learn all these things so that you have a great future. They simply fail to plan. So if you don't have a plan, you're setting yourself up for failure. It comes with everything that you guys are doing. And this is the dad in me talking to you, and I'm going to get a chance to talk to a bunch of young people. That one line can change things. If you're sitting in class and you're not paying attention, you're messing up. Like everyone here is trying to help you guys be the most successful that you can be. I have a 14-year-old daughter. I tell her this all the time, and I want this to stick. I only get an hour with you guys. If there's one thing that you take away from this whole thing, remember that part. The rest of it we can look up and we can teach you, but there's certain things that you have in life that you just need to know. Use your resources. You guys have all these great professors at Iowa Central. Don't sit here and think that this is fun time. Like, learn something. I'll tell you something that was a little disheartening to me, and this is why I really want to drive this one home for you guys. I asked someone for some referrals of people to, maybe come work for me, and the number of people that they said that they would recommend to me, most all of them were going off to 4-year school. Okay, so it wasn't really a good fit for someone to come work. 2-year education at Iowa Central is extraordinarily valuable if you apply yourself to it. There's a lot of stuff that you're going to learn in 2 years here at Iowa Central that you can make an entire career out of in the investments, insurance, financial industries. Not everyone needs to go on to that 4-year degree, but what you have to do is leave an impression with people while you're here. You have 2 years to impress your professors. You have 2 years to learn as much as you can. You have 2 years to do all of the things that are going to set you up to win. That's having that plan and executing on it. If you're sitting here goofing off and you don't take this seriously, an employer's not going to take you seriously, so you're wasting your time. You might as well go out and get a job now. Learn stuff while you're here. Learn stuff that applies. Learn to work hard. Learn that work ethic that really drives you, so that when you go out in the real world and people are looking for people, for you guys to employ, you're the future of this country. We want you guys to have the skills and the drive that we need to make this country what it has been and what it will continue to be, the greatest place in the world. So with that, that's my soapbox. But I really want you guys to sit down and think about that. Why are you here?
Awesome, thank you. So let's go to the last one. Does anybody have any questions for Mitch here? And we've also put his information up here, so if you do have any questions about insurance or anything we've talked about today, you can always reach out to him as well. But I think that's Jonathan with his hand up, so yeah.
Yeah.
The question was, how do you go from changing from your personal insurance coverage to employer insurance coverage? Are you talking about health insurance? Your employer will take care of all of that. Generally speaking, I've never heard where they have not. So usually they'll take care of it. And if anything, you just need to let your own personal insurance know that you'll be, jumping onto a new policy with your employer and you need to discontinue yours. So.
I'm an open book. Anybody else?
Nope. Okay.
Ready to go?
Thank you.
For those of you who need to earn extra credit by seeing a performance opportunity, next week we are here. This will be up and our set is here. So we're doing Who's Dying to Be a Millionaire? So I hope you can come. Thanks.